Welcome back to the AMON News Weekly Crypto Roundup. I'm your host Lloyd Newkirk, bringing you a recap of the past week's top stories from the crypto world. In this episode, we cover Polygon being selected as part of Disney's accelerator program, an update on Celsius's Chapter 11 bankruptcy hearing, Bitcoin touching above $23,000, and more. Matic has been on fire lately. Polygon's native token has been performing significantly well lately, perhaps in part to the news that the blockchain entity has been selected to partake in Disney's accelerator program. You heard right, Disney. Last Friday, news broke that the Ethereum Layer 2 scaling platform Polygon had been selected to participate in Disney's prestigious accelerator program, giving Matic a significant bullish push. It was announced that Polygon is one of 6 entities that will participate in Disney's accelerator program, which focuses on facilitating the growth and development of innovative companies from around the globe. During the program, each company will receive investment capital, access to co-working space at Disney's creative campus in Los Angeles, and guidance from Disney's senior executives and other prominent business leaders. As noted by Ryan Wyatt, Polygon's CEO, on Wednesday, Polygon is the only blockchain selected for the accelerator program, adding that the selection speaks volumes to the work being done at Polygon and where we're going as a company. Moving on to the ongoing Celsius saga. The first Chapter 11 hearing took place on Monday, July 18th, and the next hearing has been set for August 10th. Another important date is July 22nd, where the creditors' committee will be formed. The committee has the goal to represent the creditors and will be comprised of 7 members, which are more than likely to be selected amongst the largest depositors. The committee will be represented by one of the largest law firms in the US, and details will more than likely be disclosed in the coming days. During this first hearing, Celsius explained how the company is planning to recover the $1.2 billion hole in their balance sheet. The company has asked permission from the judge to finalize the mining facility, which would allow Celsius to generate 20 BTC per day. It is still unclear how the facility would be able to cover the huge hole in the lender's balance sheet, though. Criticism of the hearing also emerged when the legal team of the bankrupt crypto lender recently reaffirmed that user funds belong to the company and not the user, with one significant exception. As per the crypto lender's lawyers at Kirkland and Ellis, Celsius's 1.7 million registered users gave up title to the crypto holdings they deposited into their earn and borrow accounts. During the first bankruptcy hearing for Celsius on July 18, lawyers from Kirkland, led by Pat Nash, outlined how retail users with earn and borrow accounts transferred the title of their coins to the firm as per its terms of service. Simply put, Celsius has free rein, and I quote, to use, sell, pledge, and rehypothecate these coins as it wishes. I can't imagine many investors are too happy about this, but it is stipulated on the company's official website. That being said, a legal query has popped up regarding whether custody account holders retain the title for their assets. Celsius's terms of service state that the crypto lender firm can't use any coins in custody accounts without user permission. That being said, Celsius's legal team still question whether this holds for crypto holdings that the firm is currently in possession of. On to Ethereum news. The world's second largest cryptocurrency by market capitalization, Ethereum has seen some significant upward price action during the past few days. Ethereum is currently leading the charge as the crypto markets struggle to recover, and analysts believe that Ether could be targeting an upswing to $1,700. The general sentiment surrounding Ethereum's long-awaited merge to a proof-of-stake consensus is perhaps one of the main reasons behind Ether's recent upswing. Just last week, Tim Bako, a member of the Ethereum Foundation, cited a potential launch date of September 19 for Ethereum's oft-delayed transition to a proof-of-stake consensus mechanism just hours before the crypto started rallying. At the time of recording this, Ethereum is up yet again and trading close to the 1.600 level. It could very well hit 1,700, here's hoping that the merge actually happens on September 19. Moving on to some more positive news, this time from my home country of South Africa. South Africa's Reserve Bank has announced plans to regulate cryptocurrencies as financial assets in the next 18 months. Several renowned crypto exchanges have cited confidence that the move will bolster crypto adoption in the Southern African nation. The decision to classify cryptos as financial assets and not currencies has been a topic of discussion for some time by the South African Reserve Bank. Kubin Chetty, the Deputy Governor of the Reserve Bank, announced the confirmation that the proposed regulations would come into effect during the year. Until now, the crypto arena in SA has developed organically with no clear-cut regulations in place until the Reserve Bank's recent announcements. In fact, the African nation has become a notable leader in cryptocurrency adoption, and it's estimated that as many as 6 million South Africans hold crypto. The general manager for Luno Africa, Marius, writes, welcomed the move and cited that he believes it will usher in a more secure environment for crypto users in the nation. On to some Bitcoin news. Could the bear market finally be over? Many analysts believe that it might be, as Bitcoin finally escaped the extreme fear zone after 73 days, as the number one crypto on Wednesday, 20 July, saw an astounding 19% increase as the bulls once again entered the market. Bitcoin rose by 7.33% and traded above $23,000 and was also up by 20% for the past 7 trading days. Furthermore, the total market cap of the crypto market has returned to levels above $1 trillion after falling below this level in mid-June. On Tuesday 19th, the crypto fear and greed index increased from extreme fear to fearful, achieving a score of 30 out of 100. Since then, it has actually improved a bit more to its current index score of 31. In a nutshell, the crypto fear and greed index analyzes the current sentiment of the overall crypto market, scoring between 0 and 100. The index is mainly based on Bitcoin's market volatility, volume and dominance, social media sentiment, surveys, and of course, Google search trend data. In more crypto regulatory news, Colombia's government recently released draft rules for cryptocurrency entities seeking to operate in the nation several months after the launch of its regulatory Sandbox program. Now, the public can comment on the proposed regulations put forward by the Financial Superintendence of Colombia, the country's financial regulator. The rules outline a new risk management system for money laundering and terror financing, cybersecurity guidelines, and methods for tracing cryptocurrency transactions. Furthermore, the plans affirm that the South American nation is working towards a future where its citizens can purchase cryptocurrencies using their traditional bank accounts. The nation's Sandbox is a unique crypto experiment that started last year following approval by the government in 2020. The initiative allows Colombian banks to partner with major crypto exchanges such as Binance and also gives citizens the ability to buy Bitcoin, Ethereum, and other digital assets. Last December, the nation's largest bank, Colombia, inked a deal with Gemini, the New York-based crypto exchange, giving a limited number of customers the ability to buy Bitcoin, Ethereum, Litecoin, or Bitcoin Cash from their accounts as part of a 1-year pilot program. That's all for today, folks. For more news, educational content, and more, visit the Amon blog daily. And remember to follow us on Twitter. Have a great weekend.